Hey folks, Dan Frio here with your real estate update for January. What is today's date? January 17th, 2024. Got it right again, folks. Okay, so what we're going to talk about today, well, here's what I want you guys to do. I want you guys to put yourself in the position of a business owner today, and also the Federal Reserve. And so when I'm going through all this data, please, at the end of this video, I'm going to explain to you guys what I meant, and I think you'll get it. Okay, so without further ado, let's get over to it. If you guys are new to my channel, what I do on a daily basis is my whole goal here is to inform and educate you guys on real estate, because there's so much just bad information out there. We focus in on, we really don't talk about home prices in general, because home prices are all over the map. It depends on, if you're in Detroit, your house prices have just gone up double digits. If you're in Austin, Texas, it might have went down maybe double digits. So it really depends on where you live. What I want people to understand is the basics behind how do you buy real estate, how do you do it, how do you qualify, and things like that. And then we focus in on mortgage rates, because I'm actually a mortgage advisor and I'm licensed in all 50 states, and I'll give you all that information at the end of this video. So if you're out there really looking to buy in 2024, reach out to us. We'd love to help you. So without further ado, let's get over to it. So what we have right here, these are the top 6 products people use when they're buying their first house. Okay, these are not my rates. These are not any individual bank's rates. What happens is Mortgage News Daily, right up through there, they do a fantastic job at this, and they survey lenders all over the country and ask them these questions. If you had somebody looking to buy a home, okay, it was going to be their primary home where they live. It was going to be a single family home. Okay, that's probably you. But then it's like these people have a 780 credit score. That's the new analysis of these numbers. 780 credit score with 25% down. I can almost assure you that's not you. So again, at the end of this video, I'll give you all my information so you can reach out to me. We can work through this. But without further ado, let's get over to see why rates are going up, and then the kind of the information behind it, especially in today's market, especially with today's data. So let's get over to it. The first thing we want to talk about today is right through here. It's retail sales. Okay, retail sales come in right now, and that's the news for the day. That's the only really big news coming in today, and I'll say it's bad news on the front of us when we're looking for, lower interest rates. Okay, so retail sales, last reading, retail sales were up 0.3. Okay, they're expected to go up 0.4. They actually doubled. They're up 0.6. Same thing with core retail sales. What core retail sales is basically they strip out food and energy costs. Like yesterday on my way home, gas was $3.09. On my way into work this morning, it's $3.30. Okay, that's so they pull out food and energy to figure out, what's the inflation rate at that level. So you've seen these numbers doubling. Okay, that's not good news, especially it's not good news for the Fed, because they want people to continue to, basically pull back their spending. So we go over to here, let's see how the stock market likes this. Well, this is a newsflash. Home builder sentiment improves for the second straight month, following drop in mortgage rates. Fantastic. But you see here on CNBC's headlines, let's see how the markets are doing based on this information. They don't like it. The Dow's down, the NASDAQ's down, and everything is basically down. So if you go through here, you're seeing right through here, retail sales rise 0.6% in December, topping expectations. Okay, so when you break down these numbers, here's what you got. But here's the area that I want you guys to focus in on if you were a business owner or the Fed. Two huge different perspectives. If you're a retail person out there, you own a retail company and you're selling stuff, here's what we're seeing in these areas. A lot of the areas keep upticking. Retail sales are up. Sales of X auto climb 0.4%, better than the 2% estimate. A control group. And then you see down through here, I highlighted it. Here's the concern. The Fed was already hammering away at no rush to cut rates. Okay, so what we're hoping is, okay, the economy starts to slow down, inflation starts to slow down, sales start to slow down. We're on the brink of a recession, but now we're seeing this. The Federal Reserve they're wanting to cut rates if they see the data's providing that. They're not seeing the data right now. Okay, the Fed has already hammered away on its no rush to cut message, and today's stronger than expected retail sales won't give them any reason to do just that. So let's do this analysis. You're a business owner. You continually are raising prices because you've had since COVID. You continue to raise those prices, and people just keep buying and buying and buying. You can see that right through here. How much debt does the U.S. consumer have? $14 trillion. It's the first time that's happened. Okay, so now let's go back and look at it. Even the bond markets aren't liking this thing. So You can continue to keep raising your prices to the point where people are like, okay, I'll keep buying and buying and buying. But at what point is that tipping point? Well, that's what the Federal Reserve's big goal right now is. They're trying to figure out at what point are people going to crack and just say, can't buy anymore. Prices are too high. I don't have the money. I just got to sit back and not really buy anything. But it's not happening. So that's what we're seeing right now. So if you're a retail person in the retail sales market, you're loving this. Your stock's going up. You can see the stock market. Last year, the S&P was up 24%. 24%. That's the top 500 companies in the U.S. Their returns are 24%. Well, that can't keep continuing. It's like if we said housing prices gone up 25% last year. How much higher can they go to the point where things crack? So let's do the backdrop. Retail sales keep going up and up and up. When will the consumer crack? Well, they're going to wait. Once the consumer cracks, then the Federal Reserve will step in and start reducing rates. When is that going to be? I kept predicting, I didn't expect today's numbers to be that good because we just came off a holiday season. I think so many people, they were pent up for COVID. At that time, they were buying houses because they were pent up and just needed to get out of their apartments. And now people are just like, they're used to just buying stuff online. And if you really dive into the data, people aren't going to brick and mortar stores. They continue to just click, click, click and buy. I do it myself. But I hope you understand, we're retail sales. If people just keep continuing to buy and buy and buy, the Federal Reserve's not going to step in and cut rates until that happens. So that's where when we talk about data dependent, we're basically waiting for the consumer to just kind of give up and say, okay, prices are too high. I just don't have the money to do so. And they're not doing that just yet. So that's the bad news in this market. And you're seeing all through here, rates are going up. So you might say, Dan, that number's going down. Well, let me explain. If you're new to my channel, here's what we follow on a daily basis to figure out where mortgage rates are going. We don't really look at the 10-year Treasury. We used to look at that. That's old news. And then we'd read our tea leaves, and then we figure out who's saying what and so forth. But interest rates, especially mortgage rates, are tied to one thing. It's a bond. This bond trades on Wall Street. It's right here. Okay, it's called an MBS bond. So it's a mortgage-backed security bond. We're just seeing right through here is the price of that bond. Okay, all you need to do is understand how this all works is if this number, the price of the bond goes down, rates are going up. Okay, if the price of the bond goes up, rates are coming down. Let me explain this to you just in a simple form. I do this usually about once a month. Let's take some extremes so I can show you how this works. So let's say we have this mortgage bond and its maturity is next year and it's worth $100. Okay, so let's use a low price to show you how this works. Then we'll come in with a high price. So let's say I pay you today $50 for that bond. Okay, remember we said it's going to mature next year and the maturity is $100. So if I give you $100 or $50 today, next year the bond matures, I give you my bond and then you give me my $100. So I gave you $50, you gave me $100 back. What's my return? What's my yield? It's 100%. I doubled my money. Okay, that's a low price. Now let's drive up that price. Okay, so let's say we have that same bond, but today I'm going to give you $100 for that bond. Then you give me the bond. Next year, I give you my bond back, and you give me $100 back. Okay, because remember, it's a $100 bond. So I give you $100, you give me $100 back. What's my yield? Zero. Nothing. I just got my money back. So do you see how when the price goes down, the yields go up? Hope that explains that stuff to you. So here's what's going on in the market right now. The markets don't like this, especially the mortgage rates, because these are tied to the mortgage rates. So you're going to see mortgage rates go up today, probably about a 0.05 to 0.08. Nothing really to write home about. This number, when I woke up this morning, right when the news came out, this was down 47 points. So we're coming back pretty strong when it comes to that. So that's basically what's going on today. And I will be live today on two different events. I have one coming up at 2 o'clock today with Kyle Seagraves of Win the House You Love. Him and I work together. We have where you guys can come out and be on our live event and ask any questions that you have, from how do you refinance a house to how do you qualify for a loan. And then at later on in the evening at 4 o'clock my time, Central Standard Times, I will be on a special event with a bunch of realtors talking about basically real estate throughout the whole country. So I hope you can visit us on that one as well. But other than that, thanks so much for watching, guys. God bless. Have a fantastic day. And if you need any assistance from me, how do you reach out to us? Well, it's pretty simple. You go to therateupdate.com, and this is our website right here. There's a whole bunch of information up here that most people don't even realize that we have. But if you're trying to get into real estate this year, you want to really buy your first house in 2024. How do you do it? Well, that's basically what we're here for. We're here to educate you and kind of walk you step by step by step. We can help you get pre-qualified. If you need help with a realtor, let's say you don't know any realtors in your area, we even have a special person on staff that actually can help vet realtors in the area that you're looking for. So that's a whole bunch of information we can give you and provide you. How do you reach out to us? Well, one, you can click the Apply Now button. Just click that. You're on your way there. But if you'd rather just call us or maybe email me directly, you can do that as well. Just scroll down to the bottom of our page. You're going to see right through here our 800 number as well as my email address, and it is right there. So feel free to call us, shoot us an email, or even hit the Apply Now button up there to get started to buy your first house, possibly in 2024. Thanks so much for watching, guys. God bless. Have a fantastic day. Bye-bye.